Hey Stewie, I keep hearing about a banking crisis from last year. What exactly happened there? I'm a bit confused by it all.
Oh, Brian, that's a good question. Think of it like a giant game of musical chairs, but with banks and money instead of chairs and people.
Musical chairs with banks. Interesting. How does that even work?
Well, during the pandemic, a lot of people and companies put huge amounts of money into banks, especially smaller ones. These banks then invested that money in really safe long-term things like government bonds.
Okay, so they had lots of money and put it somewhere safe. Sounds smart enough.
It was smart at the time, but then the Federal Reserve started raising interest rates to fight inflation. Suddenly, those safe long-term bonds weren't worth as much if the bank needed to sell them quickly.
Wait, so the investments lost value because interest rates went up. That seems like a big problem.
Exactly. Then a few specific banks had a lot of their customers start pulling out money all at once, often because their industries were slowing down. It was like everyone suddenly wanted their money back from the piggy bank at the same time.
Well, a bank run. So if the bank's investments lost value and everyone wants their cash back right away, that's a recipe for disaster.
Precisely. The banks didn't have enough liquid cash to cover all the withdrawals because their long-term investments were tied up and worth less. It caused a big panic, especially for tech companies that used those banks.
So it wasn't that the banks were doing super risky things initially, but the market changed and then everyone panicked. That makes more sense now.
That's a pretty good summary, Brian. It highlighted how quickly trust can erode in the financial system.
I feel like I actually get it now. Thanks, Stewie.